BC.com.
We're back with a news alert from the pharma space. Angelica Peebles joins us with that. Hi, Angelica.
Hey, Scott. The Wall Street Journal is reporting that Germany's Merck is nearing a deal for U.S. biopharma company SpringWorks. They're saying, citing people familiar, that this deal would be about $3.5 billion. SpringWorks has a market cap of around $3.3-ish billion. You can look that stock up about 10%. Scott?
Angelica, thank you. Angelica
Thank
Peebles.
you.
Meantime, Netflix has been on quite the winning streak of late. Julia Borston joins us now with that story. Julia?
Hey, Netflix shares are up more than 4% today to a new all-time high, and the stock's on pace for its third consecutive week of gains, its longest winning streak since November. This comes on the heels of far better than expected earnings a week ago, which prompted a number of analysts to increase their price targets on the stock. The streamer is increasingly seen as a defensive play, Piper Sandler calling it the best positioned name in consumer internet. A number of analysts noting that it's insulated from tariff risks and that consumers are expected to keep paying for Netflix even in a turndown. Now, shares are now up nearly 97% in the past 12 months. And despite those gains, analysts are still largely bullish. 71% have a buyer overweight rating on the stock. 27% have a hold. Only one analyst is underweight. Scott?
All right, Julia, thanks so much. Julia Borston. Up next, we track the biggest movers into this close today. Pippa Stevens standing by with that. Hi, Pippa.
Hey, Scott. One discretionary stock is popping after sticking with its guidance, saying it's managing tariffs, at least for now. The name to watch coming up next.
want to be
All right, we're up a cool 500 now on the Dow as we approach the close. What you see on your screen is our introduction to you of our newest subscription streaming product, CNBC Plus. You can stream Closing Bell and all of your favorite CNBC shows anytime, anywhere, and also on demand. For information, you can scan the QR code on your screen or head to cnbc.com/plus. About 10 minutes to go before the closing bell. We'll go back to Pippa now for the stock she's watching. Tell us what you see.
Well, Hasbro shares are soaring after the company reported better than expected results and extended its long-running licensing deal with Disney. The toy maker said it's well positioned to manage tariffs, but said it wouldn't provide an update to its full-year guidance amid that uncertainty. Shares up some 15%. But Procter & Gamble is sliding after the consumer goods maker cut its outlook and said price hikes are likely due to the inflationary effect of tariffs. For Q3, the Tide and Bounty maker reported better than expected earnings, but a miss on revenue, and those shares are now down 4%. Scott?
All right, Pippa, thank you. Pippa Stevens still ahead. We'll get you set up for Intel earnings in overtime. We're back on the bell just after this break. All right, coming up next, we get you set up for all the big earnings hitting in overtime tonight. That and much more in the Market Zone, which is next. All right, we're now in the closing bell market zone. CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day, plus two earnings reports we are watching closely in OT. Steve Kovac on T-Mobile, Christina Partsinevelos on Intel. But Mike, we have a nice move here going into the close.
We do. This market has kind of made very good use of it being quite oversold and having the overheated Sell America trade pretty much culminate a few days ago. Now we're at an interesting spot. It might get trickier pretty soon from here. We're no longer oversold. In fact, short term getting a little bit overbought right at the top of the range. It's right at the level we fell to on April 3rd. So if you think that the market is sort of trying to get in sync with your expectations about tariffs, close on April 2nd, you thought it was going to be more benign than we have right now. At some point, hope has got to hand off to confidence, and you have to have these kind of sketchy talks about a deal turn into something substantive. We'll say one difference today. It's very much a tech-led situation. But basically it's the Microsofts, NVIDIAs, Broadcoms that are really powering the index move.
Steve Kovac, T-Mobile, what should we look for?
Yeah, Scott, this might actually give us a good read ahead of Apple's earnings, which is a week from today. Also, just consumer sentiment in general. Let me go back to a rival of T-Mobile. So this week we heard from Verizon CEO Hans Vestager on his earnings call saying the company's not going to cover price increases on smartphones. In his words, that's just not going to be possible. We know carriers love to give those big subsidies to phones to get new customers on their plans or take them from another rival carrier. Also, you want to look out for commentary on pull-forward demand this spring from smartphones and other devices. Anecdotal reports have been saying folks are buying ahead of those tariffs in late March, so we'll see what they say and also what they're saying in April, Scott.
All right, Steve, thank you very much for that. Steve Kovac. Christina Partsinevelos, what about Intel?
Well, this is CEO Lip-Bu Tan's first quarterly appearance since taking the helm of Intel, and he's already supposedly making dramatic changes, including reportedly cutting approximately 20% of the workforce to streamline operations and create a flatter organizational chart. Despite missing the AI chip boom and losing market share to AMD in data centers, Intel stock has really outperformed this year, up more than about 7% right now, while the broader semiconductor SMH is down about 13%. But challenges remain. TSMC recently denied foundry partnership rumors, and concerns persist about Intel's ability to compete in the NVIDIA-dominated AI landscape. So while Q1 results may benefit from PC sales being pulled forward by tariff concerns, investors are really focused on Tan's strategic vision for cost reductions, efficiency improvements, and accelerated product timelines to regain market share. Scott?
All right, Christina, thank you very much. Christina Partsinevelos, 2 minutes to go. And Alphabet looming large.
Yeah.
So how much are you watching this now?
I'm watching. I don't know that it has magical bellwether powers, but the reaction to all these reports is what matters to me most. There's a lot of suspicion on Alphabet. There has been for a long time based on how it allocates capital, whether it's going to get a return on all of its investments, and obviously the breakup and the advertising leverage and all the rest of it. And, really whether search is going to be as resilient as we've come to learn it to be. Stock is as cheap as it's ever been relative to the market, but maybe that's what happens with very mature companies. So I like it as a kind of battleground tell for whether the market's going to start to, rebuild some of that valuation premium on some of the better business models. We'll see about that. I mean, we've done some work in terms of skimming away some of the valuation excess across the market. You've gone from 22.5 on the S&P forward earnings down to like 18-ish times. Nobody's saying it's cheap, but it definitely lowers the hurdle just a little bit.
Good to get the CEO on the record right now as to what he sees in terms of the spend, what he sees and thinks in terms of the environment, when, frankly, we're kind of questioning everything. Can the spending hold up? The CapEx from these companies, can it hold up? Questioning everything, and also along the way, the market as a whole has become a little bit less geared to the overall AI theme, as you would imagine. The Mag 7 has gone from 34% of the S&P 500's weight down to like 29. Now, it's still really high historically, but it's interesting. It does show you that if you look at the frequency of mentions and conference calls, AI is way down, of course, tariffs are way up. So we'll see if it can change the subject. The market's been looking for the opportunity to have the subject change a little bit. We're on this trade treadmill. Hard to see us stepping off it soon, but maybe so. Good stuff, Mike. Thank you. That's Mike Santoli. Bell's going to ring us green, and decidedly so. Big earnings are looming in overtime to Morgan and John.
That's the end of regulation. Vista Equity Partners ringing the closing bell at the New York Stock Exchange. NASDAQ Inc. doing the honors at the NASDAQ. Well, stocks going out near the highs. Tech leading another rally. Has a strong week for the major averages. Gains momentum. S&P finishing up about 2%. That's the scorecard on Wall Street. But the action's just getting started. Welcome to Closing Bell Overtime. I'm Morgan Brennan along with John Ford.
And it's another huge hour of earnings reports on the way, headlined by the first Mag 7 name to give results, that Google parent Alphabet, along with Intel, Gilead, T-Mobile, and more.
Plus, we will bring you an exclusive interview with T-Mobile CEO Mike Sievert. This is his first comments before talking to Wall Street analysts on the call later. And as we await those earnings, let's get straight to today's market action. Joining us now, BD8 Capital Partners CEO Barbara Duran and G Squared Private Wealth founding partner and CNBC contributor Victoria Green. It's great to have you both here on another day of green for the major averages. Barbara, I'm going to start with you. We've got the S&P finishing, it looks like, up 2%. The NASDAQ 100, 2.8%. It looks like tech is really in the driver's seat right now. Does that hold?
Well, that's the question we're all asking after 3 days of good market action. Is this really the market, as Mike Santelli just pointed out, was very oversold. And the most oversold names in terms of where their highs had been were really some of the mega cap techs. And those names, will start today in earnest. And next week we have Microsoft and Meta and Apple and Amazon. So
hold on, Barb. We got Intel results out already. Christina Parzinello is going to give us those. Christina.
John, well, Intel delivers Q1 beats on EPS of 13 cents, which is 12 cents higher than what the street estimated on revenues of 12.7 billion, both driven by strong data center revenues as well as PC sales. But the company issued weak Q2 gross margins and guidance, 0 for Q2 EPS and a midpoint of 11.8 billion for Q2 revenues. John, you and I just spoke with the CFO, Dave Zisner, just about 30 minutes ago, and he acknowledged there's likely, quote, pull ahead for purchases before tariffs hit, driving that EPS beat. The company is cutting 2025 OPEX from 17.5 billion to 17 billion. So that would include workforce reductions, though there was no specific headcount target. Despite that 20% number that was reported just a few days ago, they said that they don't have a number just yet. CEO Lip Bhutan has been in the role for about 5 weeks and plans to streamline management layers across the organization. Intel CFO said they remain committed to the foundry business while planning to cut non-core products, could be anywhere between 10 and 15 products, and they plan to refine their AI strategy. Shares are a little negative, down 1%.
Yeah, fractionally interesting. The CFO also telling us for 2026, they're targeting $16 billion in OPEX. I noted that's about 10% down from where they were before. Asked if that reflected the headcount, and as you mentioned, he said they don't have a headcount number yet. So a lot to learn on the call, and a lot more to learn that won't be on the call because they don't know that yet.
Yeah. Meantime, shares of Intel are falling right now down about 3%. We're going to bring Mike Santoli into our market conversation as well. I'd also just note that Alphabet earnings have crossed. We're going through those results. We'll bring them to you momentarily. Barb, I'm going to go back to you, and I'm going to caveat it with we might be getting ready to interrupt you now for Alphabet, but your thoughts on, okay, and never mind, we're going to Deirdre Bosa first for Alphabet. Hi, Dee.
Hey, I do have the Alphabet numbers, and stock is surging after hours, up nearly 6.5%. It is a beat on both the top and bottom lines. EPS coming in at $2.81. That is well above the $2.01 that was expected. Revenue also a slight beat here, 90.23 billion, 89.1 was expected. I also just want to separate out Google search and other revenue. This is important because it's been exposed to Chinese e-commerce and the tariffs, as well as the switch to generative AI chatbots. That is coming in essentially in line at $50.7 billion. 50.5 was expected. So perhaps a relief from some investors who were worried that its market share, its ad revenue was going to be eaten away by this move to generative AI. Last one I want to give you guys, cloud revenue coming in line, 12.3 billion. That was expected. I'll continue to dig through these numbers and just keep in mind that we do not get specific or official guidance, but we will get some color on the call, which kicks off in about 25 minutes.
Okay. Deirdre Bosa, thank you. Shares up 5%. Okay. Third time's the charm. Barb, want to get your reaction to Google.
Yeah, well, those are great numbers because especially on the EPS line, that's a big beat. And coming into it, the sentiment was not great. Nobody had big expectations given the uncertainties. And there's three big ones. I mean, there's the antitrust, there's two lawsuits, but that's sort of in the stock because appeals will probably go on until 2027. There's obviously the competition issue with AI and the search functions and how that, if that eated into their search. So there's and also the advertising. So this is very interesting. I can't wait to hear what's happening with the advertising because probably about 10% of their advertising comes from Chinese advertisers like Temu and Shein. So it'll be in the cloud. They were capacity constrained. People were looking for maybe 27% growth there. So that could be very encouraging. And also, we don't hear much about Waymo because that's really not contributed, but they continue to gain momentum and they're up to about 200,000 rides a week. So I'm really eager to hear about that. And also their cap spending, which they estimated at 75 billion this year. People want to know, is it working? Where's the ROI? And are you going to taper down? So there's a lot to hear on this call, but this is a good start with these numbers.
Yeah, and for a market with skittish investors, those CapEx forecasts are going to matter perhaps even more than usual. Victoria, I want to get your thoughts on this because we do have two tech names moving in two directions here. Alphabet higher, Intel lower, both representing And okay, hold on a second. We're going back to Deirdre for more on Alphabet's results. Deirdre.
There is more. Alphabet issuing a 5% dividend increase to 21 cents. That's from 20 cents. And also $70 billion additional buyback. This is key capital allocation, of course, especially as Senator Pichai reiterated just about a week and a half ago their CapEx plans. We'll look for more color on that in the call, but positive sign that the capital returns program continues with a $70 billion additional buyback and a 5% increase in the dividend.
Okay, Deirdre, thank you. Victoria, want to get your thoughts on that. Also want to get your thoughts on Intel. Two totally different names when it comes to the tech trade.
I know. I think Google, it's a sigh of relief for everyone. I'm a little more concerned. I mean, it's great they're buying back their shares. They're down 30% from the peak, so I would have been shocked if they hadn't. So for me, but Google, it's more about what does the next year look for them. Search not growing, I think, is a bad deal. I mean, they used to have about 93% of search. Now they have about 89% of search. It's slowly getting eroded by ChatGPT, by social media. And so we look at that and say, how secure is search, especially with the antitrust? You know, they didn't really have some great hearings this week. We know they're under a little bit of pressure on how they're dealing with Samsung, the App Store. Gemini's been a little bit slow and glitchy. And so I look at Google and say, can you start to execute better? Q1 looks great, but we aren't in a recession. We're not seeing the pressures in Q1. But how does advertising hold up in the rest of the quarter? So I'm happy they cleared the bar. Not sure they're out of the woods yet. Intel, I think it's all about their outlook. I didn't really care about Q1. New CEO just got here. It's what is he going to do? Are they going to get headcount below 100,000? When is Foundry going to break even? How are they divesting? You know, when are they going to go Ohio built? He is turning an aircraft carrier, though, so you have to have reasonable expectations. Market, though, might be a little bit sad that maybe we didn't see the bottom yet on margin pressures, on Foundry losses, on you know, making sure that we're not quite at growth yet. So I think a little disappointment that Q1 wasn't a little stronger and outlook wasn't a little stronger, but let's give the new CEO a chance. He wants to bring back engineering, bring back innovation, and that's just going to take a little bit of time with such a large company.
And to know exactly the size of those cuts that are coming as well. Mike Santoli, let's back up for a moment. Look at the overall market. The S&P knocking on the door of 5,500 again, around those levels where post-tariff announcement, I think the market sort of bumped its head on the ceiling. What's the significance of that as we continue to plod through earnings season in an environment that so far is in some cases not as bad as some feared, but still a lot of wood to chop?
There's a lot of tactical significance to this level or just this general zone of trading. It's like a 3% move up from here in the S&P to get to where we closed on April 2nd. So it's kind of tough to imagine that we're going to just slice right through that and never look back on the upside because, you know, obviously we have nothing like full resolution. But I do think that the ability to refocus a little bit on some of the corporate fundamentals, we know what the starting point was. Obviously, some companies have some pretty cautionary things to say, but in general, it's not been dinging the overall aggregate index at this point. So there's plenty to prove from this rally. If we could decisively break above 5,500, you're going to find a lot of folks who are kind of starting to think that maybe this is a show of resilience and we can make a better run at those pre-tariff levels. But you don't want to over-anticipate that. Already after 3 days of this very strong rally, you're starting to see it maybe look a little stretched in the short term.
Okay. T-Mobile earnings are out. Stop dropping about 5% initially. Steve Kovac has the results. Steve?
Yeah, John, that's despite some beats here on the top and bottom lines. Let me go over the numbers and let me tell you what I think is happening. EPS was a beat, though, by 12 cents, $2.58. Revenues, just a slight beat here at $20.89 billion. Street wanted to see $20.62 billion. Things get a little interesting here, though, in the net adds. So as far as postpaid net adds, that was a beat at 1.34 million. Street wanted to see 1.18 million. But phone net adds, handset net adds, that was under expectations, 495,000 versus 504,000 expected. Still, some other good stuff in here. Service revenues largely in line, and guidance, reaffirming guidance on postpaid net adds and slightly raising guidance for the core adjusted EBITDA for the full year. We see shares still, despite all this, off better than 5.5%. Morgan.
Okay, Steve Kovac, thank you. Joining us now ahead of the earnings call in a CNBC exclusive interview is T-Mobile CEO Mike Sievert. Mike, it's great to have you back on Overtime, and let's start right there with what you saw in the quarter, including specifically those phone net adds, which do seem to be coming in a bit softer than the street expected.
Well, it was just a really strong quarter overall on customer growth. I mean, as your lead-in said, 1.3 million postpaid net additions was an all-time record for a Q1. And those 500,000 postpaid phone nets were pretty much in line with expectations. And we were able to reaffirm our guide. Now our guide on overall postpaid and postpaid phones, the highest it's ever been at this point in a year.
The fact that you're reaffirming guidance, even boosting the EBITDA aspect of your guidance for the year, given all the macro uncertainty we've been talking about and tariff dynamics, which some of your competitors, including AT&T, Verizon, say if they see higher costs, they're going to pass it on to customers. Why do you feel confident reaffirming those numbers?
Well, we're, just firing on all cylinders as a business. And we were able to see customer revenue growth in Q1 outpace expectations. In fact, revenues per customer at both the account and the individual line level moved up past expectations, causing us to increase our guidance for the full year on both metrics. Now, revenue per account looking to be up 3.5% year over year, with overall service revenues probably closer to 6% up year over year. So customers just keep coming to T-Mobile. And, we have the most differentiated value proposition we've ever had. And I think, Morgan, to the premise of your question, in a time where people are raising their eyebrow maybe at the economy, they're certainly interested in the brand that can save them some money while giving them the world's best 5G network.
Mike, you guys saw an increase in your total high-speed internet-only accounts. What does that signify? We see some cable names out there having some trouble holding on to broadband customers. But is that a cost-saving measure where they want high-speed internet only? Or is that customers who you don't think you would have gotten into other products anyway, who are just coming to T-Mobile for that?
Well, this number on broadband for T-Mobile was the 13th quarter in a row that we've led the entire broadband industry, not just the fixed wireless component, but the entire broadband industry on customer growth. We signaled last fall that we see this being on its way to 12 million customers served by 2028, and we're very much on track for that. People love the service. It has the highest net promoter scores in the industry. It has an incredible value, and it really showcases the power of 5G and how it's changing what a lot of people thought about how the future would unfold.
What can you tell us about the demand for value? Because I see postpaid phone ARPU was down a bit, in part because of higher promotional activity, bundled offerings. You also said that there was, I believe, higher promotional activity in consumer. Is there a search for value, for consolidation in wallet, as well as quality out there?
Well, the nature of competition's constantly changing, but the extent of competition, not really. And I think this is a misunderstanding among some investors. Every quarter it plays out a little differently, but the industry overall is the healthiest it's ever been. T-Mobile's the best house in a really good neighborhood. I mean, overall industry cash flows last year were 50% higher than 2022, even during this period where people say it's getting too hot in the kitchen. I don't agree. The nature of the competition keeps changing, but that's what T-Mobile's good at staying in front of.
How to think about the portfolio? Obviously, you have broadband. We just talked a little bit about that. You acquired Mint. Now you're acquiring U.S. Cellular. And then you are broadening out your partnerships, too. There was that perhaps most buzzed about, if not one of the most buzzed about, commercials that you put out with the Super Bowl, rolling out the beginning of your Starlink service and opening up some of that access to customers, even on other networks with other wireless operators. How are you thinking about the evolution of the portfolio and the role things like space are going to play in it?
Well, it really speaks to the moment that we're in. I feel that T-Mobile is more differentiated right now at this moment than we have ever been, with the world's best 5G network, new rate plans that are speaking to exactly what people want, and T-Satellite. Look, there's nothing like T-Satellite. I mean, our competitors would love to have you believe there is, but with 550 satellites and counting in the air, our vision is that you are always connected. You are reachable with your phone in your pocket, even if you don't know you've left a terrestrial network. And this is so important, we've decided to throw the doors open to AT&T and Verizon customers as well, because they can't get anything like this anyplace else.
All right. Mike Sievert, CEO of T-Mobile on earnings, joining us first here on Overtime. Appreciate it.
Thanks, guys.
Meantime, Gilead earnings are out. Stock is dropping here in overtime. Angelica Peebles has the numbers. Angelica?
Hey, John. Yeah, it's a mixed Q1 here for Gilead. The company beating adjusted EPS expectations of $1.81 a share, again adjusted, versus the $1.79 estimate. And revenue came up short, though, at $6.67 billion versus the $6.81 billion that the street was looking for. And across the portfolio, HIV was okay. Biktarvy came up a little bit short. Descovy did come ahead. And oncology was really weak in the quarter. Trodelvy sales of $293 million, missing the estimate of $346 million. They are reaffirming their full year adjusted EPS and sales guidance. And I talked to the company, and they're saying that this forecast does include known tariffs and expected increase in input costs, but it does not include any potential pharma-specific tariffs. Of course, the president has been talking about how he wants to impose tariffs specifically on pharmaceutical imports. But the company says that they feel like they're less exposed because the majority of their manufacturing is in the U.S. and their IP is based here. So 80% of their profits are recognized in the U.S. Of course, we'll listen for more on the call. Like you said, that stock down about 3.5% right now. Guys.
Okay. Angelica Peebles, thank you.
Thank you.
We've got much more after hours action straight ahead, including analyst Mark Mahaney's first take on Alphabet's results and the read-through for the rest of tech.
And we'll talk more about Intel's quarter and what to listen out for from CEO Lip-Bu Tan's earnings call. His first as Intel CEO, kicks off at the top of the hour. Also, check out Skechers, just out with earnings results, missing on revenue, withdrawing its prior 2025 guidance due to, quote, macroeconomic uncertainties stemming from global trade policies. Wonder which ones. You can see that's down 8.5%. Overtime's back in 2. Alphabet earnings out moments ago. Let's bring in Evercore head of internet research, Mark Mahaney. He's got an outperform rating on the Google parent. Well, it's outperforming here in overtime. Particularly curious how you gauge the results in advertising areas like YouTube versus your expectations.
I think YouTube and search largely came in line with pretty much everybody's expectations. I think the real star of the show here was the margins. I think we just had record high margins for the business, or at least in multiple years. Record high operating margins at the cloud business too. YouTube and search all came in kind of in line. What we don't know is what the outlook is like. I think they'll give you some loose commentary on the earnings call. I would imagine their commentary to be neutral to cautious. I think I'd be surprised if it wasn't. And the other thing that somebody already pointed out. Like, they're doing the right thing with their cash. They're buying back more stock, and they're upping the dividend. So I think this is what you kind of want Alphabet to do in a tough environment. You want them to manage what they can, which is expenses, and they're showing you they can do that.
For investors out there wondering what's moving the stock and what to worry about, how much does antitrust play into this at all? Can you really just watch the fundamentals and invest in this based on that? How much of it is core ads versus cloud momentum? And is a breakup potentially good? Not that it's going to happen, but that as the likelihood or chance of it happening creeps up a bit, does that boost the stock to unlock shareholder value?
John, I think there are three overhangs here on Google. One is DOJ, one is whether Gen AI disrupts the search business, and the third is whether the company can really manage its expenses and act fiduciarily responsible when it comes to all that capital that they've accrued. I think they're giving you evidence on the third one. I think that's kind of why the stock's up. On the Gen AI risk, it's just if they keep going and don't show quarter after quarter with consistent search revenue growth, it kind of over time will deflate the bear argument. But it's going to take a while for that to happen. On the DOJ, I don't think we're going to know until August. That's when the judge in the core search case is sort of suggested, indicated, and he's been true to his word in the past that he's going to deliver his remedies. I think the worst case remedy is probably off the table. So my guess is that that's going to be a relief event, but we're not going to really know until that day. The judge in the initial ruling kept his cards very close to his chest. I expect the same this time.
I know they recently reiterated their full-year CapEx. Do you expect that to hold steady? And if so, is that a good thing?
I think it's a good thing. I think they're going to hold steady. I don't think Amazon, Meta, or Google, the three companies I look at that are spending the most on this, I don't think they're going to back away. I think if you read the Amazon shareholder letter, the Jassy shareholder letter, I know you had him on 2 weeks ago. I mean, they see something in here. They've invested heavily. They feel like they've already gotten a good ROAI. And my guess, I'd be really surprised if they backed away from their AI spend. Okay, in a real macro downturn, which we haven't seen, in a real macro downturn, maybe fiscal 26 CapEx gets cut, but I don't think you'll see that this year. I'd be very surprised. I think they're leaning in, and these are pretty smart, sober, cutthroat capitalist companies, and so my guess is that they're making the right move. And I've seen good evidence of return on AI spend already. I think these companies have too. I would be shocked if they cut it.
Okay, and of course the meaningful impact and ripple effects of that maintained spending to the AI infrastructure trade as well is one to watch. Mark Mahaney, thank you. Great to speak with you about Alphabet. Up next, we'll talk about Intel's results. It's the first report under the company's new CEO, and the outlook for the stock, which has handily outperformed the market so far this year, but is down right now.
Yeah, and plus, we just heard from T-Mobile CEO, and ahead on the show, we will talk to Nokia's CEO about its new multi-year contract extension with T-Mobile, as well as the impact of tariffs and potentially AI. That stock got hit today, down about 8.5% on results. Overtime, we'll be right back.
CNBC.
Welcome back to Overtime. Boston Beer earnings are out. The company discussing the impact of tariffs, and Brandon Gomez has the results. Hi, Brandon.
Hey, Morgan. Yeah, look, a massive beat on EPS. You can see that number there coming in on the top line. Bottom line, also a beat. Revenue coming in $453 million ahead of the $434 that was expected by the street. Now, the company did reaffirm its full year guidance, though it did disclose that does not include the impact of tariffs. It did say tariffs will have unfavorable impact on fiscal year 25, about $20 million to $30 million, or about $1.25 to $1.90 per diluted share. I will say a lot of this comes through the aluminum and steel impact. Obviously, this company has a lot of exposure in terms of the cans that they do sell to their consumers. Some estimates by Piper Sandler have that at about 93% of Sam's products going through aluminum cans. So again, we'll see how that impacts results going forward, but we'll be waiting to hear more on the conference call, guys.
Okay. Brandon Gomez, thank you. With shares of Boston Beer popping 7% right now. We also have a news alert on Apple, and Steve Kovac has those details for us. Steve.
Hey, Morgan, this is coming out of a Bloomberg report that just came out. John Giannandrea, who's the head of artificial intelligence at Apple, Apple is reportedly stripping away this robotics group that he was previously running. Very early days for robotics at Apple. We haven't seen any products or even tons of hints at what they're working on. But this would be the second group that Giannandrea has lost this year. Earlier this year, you might remember, Apple was supposed to issue that big AI Siri update, and since that failed to launch, Giannandrea reportedly lost access to the Siri group as well, which is now being run by other executives. So it seems like he's losing more and more responsibility as this kind of theme around Apple that it's falling behind in artificial intelligence and taking away now responsibility from the head of AI more and more as he focuses on what's called machine learning, which is the stuff that happens behind the scenes on your devices. So we see Apple shares, they're not really reacting to this, up about not even, just barely flat, let's call it. John, I'll send it back over to you.
Steve Kovac, thank you. Well, Intel shares are sinking here in Overtime after reporting Q1 earnings results moments ago. You see it's down 7%. Let's bring in Susquehanna senior analyst Christopher Rolland. Christopher, thanks for joining us. So how much of this reaction you think is because of the guide? How much perhaps has to do with the questions remaining over cutting the OPEX target for 2026 down to $16 billion, but not clarity yet on what that means on headcount and structure, though we do expect that's coming in a few weeks or months?
Yeah, I think the rumors are a 20% workforce reduction. This wouldn't quite be 20. We will see. But in terms of the after hours reaction, I think there are a couple of things here. Everything you mentioned around headforce reduction. In addition, the 2Q guide was light. And even though 1Q beat, there's a couple of things here to note in the presentation. So number one, they said better volumes on PC. We think that's PC related pull-in because of tariffs. Secondly, they called out more competition. We think AMD is taking share here, even in the first quarter. And then lastly, data center, which also beat in 1Q, they noted that this was related to AI head nodes. What that means is for every 4 GPUs that NVIDIA sells, Intel sells 1 CPU for DGX. And so this was really where data center beat, which really isn't a standalone Intel product. So we think all of those things have the stock down in after hours.
Do we yet have a sense of how Lip-Bu Tan is going to be different from Pat Gelsinger? We hear about cutting back some areas that are non-core, but we're not sure what those non-core areas are yet. There are rumors out there about the extent of headcount reduction, and we know about their intent to flatten the organization. But exactly how that affects partners, how that affects velocity, do you have a sense yet? Or do you have a timeline on when you need to know?
Yeah, he did put out a statement, so it does appear to look flatter. He's going to get rid of layers of management, and he thinks that this will overall increase response time overall for the company. So it looks like it's going to be a smaller, leaner Intel versus Pat and predecessors.
You have a neutral rating, Christopher, on the stock. Is this, as one of our guests earlier in the show put it, dead money? And at what point does that change?
Yeah, I do think it's dead money in its current strategic form. I would love to see this company broken up into manufacturing on one side and product on the other. I think particularly with Trump's pro-USA stance, manufacturing might even have a chance here. There's also rumors out today of increased interest in their 18A foundry operation, and I would love to see large hyperscalers building out in America using Intel. And so I do think that that could be a viable way forward, path forward to unlock value for the company.
Okay. Christopher Rolland, thanks for joining us with shares of Intel down 6% right now. It's time for a CNBC News Update with Bertha Coombs. Hi, Bertha.
Hi, Morgan. A federal judge today partially stopped the Trump administration's effort to overhaul elections. The judge blocking parts of President Trump's executive order, including a provision that would require proof of citizenship in order to register to vote in federal elections. The judge ruled the president does not have the power to regulate that. American liquor exports hit a record high last year, driven by tariff concerns and global trade disputes. In a report published by the trade association Distilled Spirits Council of the U.S., exports hit $2.4 billion. Exports to the EU rose 39%, though they dropped nearly 10% for the rest of the world. And Pro Football Hall of Famer and First Take panelist Shannon Sharpe announcing he's stepping away from ESPN in the wake of a $50 million sexual assault and battery lawsuit. In a statement, Sharpe said he plans to return for the NFL preseason and that the relationship at the center of the allegations was, quote, 100% consensual. ESPN said it agrees with Sharpe's decision. Back over to you, John.
Bertha, thank you. Well, Alphabet's earnings call just getting underway, and we're going to bring you any headlines as we get them and get a shareholder's first reaction to the move.
After the break, are U.S. stocks exceptional or expensive? Mike Santoli returns with a look at the shifting global appetite for American equities. Over time, we'll be right back.
AI meeting agent.
Welcome back to Overtime. Let's bring back senior markets commentator Mike Santoli for a look at how tariff uncertainty is hitting American companies versus the rest of the world. Mike?
Yeah, John, or at least how it might hit companies differently. So this is the profit margins on average between the S&P 500 in the U.S. and the rest of the world. Deutsche Bank broke this down. The rest of the world is Europe, Japan, and emerging markets, the vast majority of the equity markets outside the U.S. So persistently, U.S. companies are more profitable. This suggests that there's not quite as much room among foreign companies to absorb whatever the ultimate tariff levels are. They can do some, but probably not all, even if it's a 10% across the board. That's what Deutsche Bank's arguing. Now, a lot of this difference, and we can also see it in the valuations, relative valuations of U.S. versus the rest of the world, is attributable to sector mix. Because we have these massive growth platforms, these tech companies that are not really matched outside the country, we do tend to have higher profit margins and higher PEs. Whether, in fact, we're going to see some convergence on that, that is the question. So that's one of the explanations for why U.S. markets have been persistently more expensive. But even on that score, if you look at the rest of the world, you go all the way back, and this is a kind of a PE level that you've seen all the way back in the 2010s, whereas still here we're working at elevated levels. So maybe room for some mean reversion there, but the exceptionalism trade, so to speak, is actually partly, or at least largely, for decent reasons, which is these uniquely profitable big companies that we have here, John.
Makes a lot of sense. Mike Santoli, thank you. So cue the QR code, because that leads in nicely to the latest installment of my On the Other Hand newsletter. This week's debate: should you bet on the Sell America trade we've been seeing in the market? You can scan the QR code there on your screen now to join the conversation.
All right, well, up next, an Alphabet shareholder and an analyst who recently cut his price target on the stock and what they're listening for on the call, which is currently underway. And later, the CEO of Nokia on how the trade war is taking a toll on his company's guidance. Stay with us. Welcome back. Alphabet's call is underway. The company is making headlines. Let's get back to Deirdre Bosa for more.
Hey, Morgan. So Senator Pichai giving an update on AI overviews. This is what people get. It's kind of experimental when they go to search, but they get kind of a search AI hybrid answer. He says it now has 1.5 billion users per month. That would represent really strong growth. The last number that they released was 1 billion users, and that was just in October of 2024, so only a few months ago. This really means that Google's getting a scaled down version of its AI to a wider group of users that aren't necessarily seeking out chatbots. So potential here to capture those users before they go to a ChatGPT or something else. AI mode is the next iteration of this. And Senator Pichai saying that those queries are 2 times longer than traditional queries. What we don't know yet, though, is exactly how they are monetizing this. That is going to be a key question, but focusing on adoption and usage growth. Back to you.
Okay. Deirdre Bosa, thank you. Well, joining us now to talk more about Alphabet, which is up 4.5% right now, is Rohit Kulkarni, Senior Research Analyst at Roth MKM Partners, along with Chris Ballard, Managing Partner at Check Capital Management and an Alphabet shareholder. Great to have you both here. Chris, as a shareholder, I'm going to start with you. Your takeaways from what we've gotten from Alphabet today, including this color regarding growth in engagement, growth in users around its AI-enabled search.
Great. Thanks for having me, Morgan. So I haven't been able to go into all the details now as their call is live right now, but we're not, as long-term shareholders, we're not surprised that they're going to continue to gain momentum with regards to their AI and their user base. On something like their YouTube, they have 2.5 billion users per month on YouTube, which is the most streamed video in the world. They have a lot of benefit to being in this AI generation and the changes that are going on right now. We're really pleased with the position that they're in right now. We know that they have the likes of ChatGPT and Perplexity kind of nipping at their heels, but they still retain the #1 dominance by far, and that's for a reason. We all love using Google. That's why we're shareholders. We use it every day. I know I do, whether to find small businesses or to find my way somewhere on a map. So they have tons of data that they continue to collect, billions and billions of data every single day from all the searches that are done through their search, as well as through YouTube and through their devices as well. So with their Gemini rollout that they put out last year, it's been really delivering well. If you do a search right now, you'll see that Gemini search populating now, which looks a little different. And it makes sense that people are staying on there a little longer these days with that.
Rohit, want to get your thoughts on what we've gotten from Alphabet from the call so far, and in terms of the numbers. We had a hiked dividend, we had a boosted buyback, cloud was in line, YouTube was in line, search, though, perhaps outsized focus there, including on margins.
Yeah, I think exactly what you said, Morgan. Inline quarter, and I think the biggest question mark is always, when do we start to see cracks in search? People have been waiting for that, and we haven't seen any cracks in search develop in the last 12 months, or even since ChatGPT was launched. So that's Google, on the other hand, is probably one of the biggest show me stories of our generation, where they're undergoing a dramatic change in technology, how internet search is going to evolve, and yet we are not seeing any changes to how the gatekeeper of internet, that is Google, has changed its economics. So I think what we are seeing so far is a big positive, and Google continues to trade at a discount to all of the mega caps. No matter which mega cap you look at, Google is the cheapest mega cap right now, and we are not yet seeing any cracks through search, YouTube, cloud, and hey, they also got Quantum, they got Waymo. There are so many things going on. So yeah.
Chris, going back to cloud, we talk about AI as a threat to search, but the cloud business and Google's position as a hyperscaler used to get a lot more attention before we got used to talking about AI all the time. How important is Google Cloud's growth rate to your expectations for the value of Google, and how do you feel about how they've been doing on that score lately?
Yeah, Google Cloud is basically #1 or #2 for us of what we're looking at all times. We want that to continue to execute on an ongoing basis here, and they are. So it looks like last quarter it was about $12.3 billion or so in revenue. They're generating over $2 billion of earnings off that business. And what we really want to see, what continue to see, is the margin expansion. So I don't know what that number is today, but it was 18% with their margins last quarter. And the likes of Apple and Amazon, their cloud business, and Microsoft tends to have margins more like 30%. So as they continue to get scale, we believe that they will not only continue to grow revenues at the pace that they've been growing them, as well as earnings, but that margin will also expand, creating cash to the bottom line for shareholders.
Okay, and Rohit, how much does the TikTok outcome matter to YouTube?
It matters a little bit. I think in the near term, probably it's a good tailwind for YouTube with engagement, not so much with the monetization. So it's a small positive. I think a bigger positive is just the macro and what we can hear from management about April and any trends post-tariff Liberation Day as such.
We'll see how that works out. Rohit Kulkarni, Chris Ballard, thank you.
Thank you.
Up next, new color on Intel's quarter and path forward from the company's new CEO. We're going to bring you those fresh details next.